Welcome back, everyone. I hope you're all doing fine and well today. So, as usual, in this video, we're going to discuss a wide range of interesting contents, interesting things, economic things. And we're going to be starting with the DXY, with the dollar index, literally, because last week we had some very interesting data that came out for the dollar, especially the inflationary data. We had the retail sales data came out last week, the CPI, the PPI. We also had the jobless claim. All of them came out last week, and they came out very, very interesting for the dollar. And I said the same thing last week. If you watched the previous video where I discussed about if the inflationary data came out quite stronger for the dollar, we would likely get a bullish reading. And when the CPI came out very decent. Okay, it came out unchanged. And then we had this PPI also came out quite lower than expected, which is not very good. You can say that. However, when you take a look at the retail sales data came out very good. All right. The jobless claim also came out very, very decent. All right. So you can see we got a very bullish reading on the dollar index itself, the dollar itself as a currency, and the stock impact also came up very, very decently. Now let's go to the chart on DXY because that is where the real deal is. So taking a look at this, all right. On Sunday, when I recorded the last video, we saw dollar around this region. And I said that if the CPI data, especially the inflationary data, the retail sales, the CPI, PPI, the unemployment rate, if they came out quite decent, okay, we're not getting a crazy lower than expected numbers. And you can see that the PPI, as we discussed earlier, PPI came out very good, all right, averagely 2.7, which is very close to the first target. However, the PPI came out very short, which is well expected considering the GDP. The quarterly GDP that was released last month, which is, quite lower than what the market was even forecasting. All right. So now, taking a look at the DXY, we saw a decent break above this region, which is above the 98 region right there. We saw it breaking above that place. Okay, this region right here got destroyed last week, got retested, and now the deal is, everything that happened so far is the break and retest. Okay, let's go to the 4-hour time frame real quickly. All right, everything we've seen so far last week is a simple break and retest. Mind you, this crazy jump up, all right, this crazy jump right here that happened last week was when Donald Trump, okay, there was a report that Donald Trump is already drafting a letter that is going to send to the Fed on how they should literally probably relieve Powell of his office, okay, or maybe sack him. I don't use sack, maybe fire him or relieve him of his office as the Fed chairman. So that was what caused this crazy move. And I actually took advantage of that because I knew that when I woke up, I was sleeping when this happened. I got up, I have some very nice trade that were running profit. I got trailed out. I saw what is going on. And I checked out, I saw that it was Trump. Then later he came on the social media pages and he actually refutes that statement that nothing like that ever happened. He's not planning to fire Powell because he actually can't do that. Normally he can't really just say, I'm going to fire Powell because it wasn't the one that even employed him in the first place, so he can't fire him. But at the same time, he has a very big influence on the panel that have the power to fire Powell. So that's just the case. But that's that aside for now. Last week I said if we see DXY right inside this box, okay, seeing DXY right inside this box, I said that I will be neutral to bullish on DXY, and that is where we are right now. I am officially neutral to bullish on DXY. Although, taking a look at the economy where we are at right now, I see an opportunity. I see a potential of DXY actually moving at least back to this 100 region. Okay, this particular region right here. There is a potential for that. There is a possibility for that. Okay. However, we still have to stay very cautious on how we approach the dollar moving forward because the pressure is not over yet. The bearish pressure is not over yet. Although the trend line has been broken, this particular daily trend line, okay, is coming all the way from the very top. Okay, I think that was like 2020, that was January 2025. Yes, exactly. All the way to July. All right, where it bottom out right here. That's when it's retesting the 2014 bullish trend line right there. Okay, I think we discussed that in great details last week. Okay, so having seen that, moving forward, the plan is to see a potential move towards this 100 region on DXY. When it gets to this 100 region, I'm still potentially bullish to neutral on DXY. As a matter of fact, I would say neutral to bullish because I'm not going to take that as the buyers coming in on DXY just yet. Okay, because when you take a look at the economy, the dollar is actually not looking very good. And if we see the move moving forward, okay, very good move to the upside, potentially the Fed can come up and start cutting rates next month, which is September. as forecasted, as it has been generally forecasted. So, I mean, a lot is still unraveling when it comes to the United States dollar. But right now, it is best to just stay cautious in how we approach the dollar. But if you ask me, where do I stand on the dollar right now? I will tell you neutral to bullish. Okay, it is not super bearish yet. Okay, but it is not bullish either. So that is where I stand right now. So moving forward, let's now discuss the top setup right here on Edge Finder. Okay, let's discuss the one we have right now. Then we're going to talk about the economic calendar, and then we jump to my top normal trade setups. Okay, the trade I have running, and then we're going to talk about my trade recommendation and wrap up for the day. So right here on top setups on Edge Finder, you can see we have some very interesting pairs right here. We have Euro GBP, we have Swiss yen, we have Bitcoin, we have US oil, we have USD CAD, we have NZD JPY still pretty bullish, and then we have gold, we have Euro JPY, we have Euro CAD. When we look at this, we have US oil as well. I think I've talked about that. I'm still holding US oil buy. NZD JPY, I'm still holding this one buy. CHF JPY, definitely I'm not going to touch this one. Euro GBP, I have a plan on it, but I'm not sure I'll be touching it. I'd rather sell this one, but right now I'm not touching it yet. Gold, I have a plan on it to buy, but for now I'm not touching it either. And that is more like it. Euro CAD, I have a short plan on it. All right, and this bullish is a score of 6, and a score of 5 is very good because it will actually slow down gradually. But right now I'm not touching it because it's really bullish right here. So economically, Euro is still very strong. It's even stronger than CAD, which we're still going to talk about moving forward. So that's why I'm not selling Euro CAD just yet. Now, taking a look at the short opportunity, the bearish currencies, we see that pound CHF, Aussie CHF, they are very bearish with score of -12 and -11 respectively. Pound dollar, I'm quite bearish on pound dollar myself. As a matter of fact, on my day trading strategy, which I do share with my students, literally, okay, I am currently shorting pound USD, I'm shorting Aussie dollar, I'm shorting Euro dollar, and we are buying USD CAD, okay. We're buying USD CHF as well, which some of them are not here. They just pure technicals, a little bit of fundamentals, just to take some very good trades during the day. A day or two is fine. So that is just by the way. AUD NZD bearish. I am holding a short trade on this, a long-term short trade on Aussie Kiwi. Aussie dollar, I don't have a trade on it yet, but it's one of my trade recommendation. Pound NZD very bearish with this negative score. I don't have a trade on it either, but I think there's a plan on it as well for me. So that is more like all the trades that I'm currently I'm watching right now. Pound dollar is one of it. It's one of my top setup and top trade recommendation. Which other one? Good, yeah, part of it. US oil, part of it. USD CAD, definitely, and that's more like it actually. Aussie dollar, nope. Aussie Kiwi, I'm shorting it already, so I can't recommend this one anyways because I'm already holding a trade on it. But pound USD, USD CAD, USD oil, Bitcoin, I think gold, yeah, they are very good for you to look into right now. We're going to talk about them in great details moving forward. So this is the economic surprise middle. And right here, you will notice that we have US dollar at 54% strength, pound at 57% strength, euro at 83% strength, which is very good, yen at 57% strength, New Zealand dollar at 100%, that is overly bullish. CAD is very weak, 29%. Aussie is pretty weak as well, 43%. And Swiss is awfully strong also at 80%. So the market is very dicey right now, especially considering the fact that I just said I'm shorting pound dollar, euro dollar. I'm not touching pound dollar yen yet. Okay, there's no pullback, so I couldn't really touch that. I'm not sure I'm shorting Kiwi dollar either, but I'm literally just on this two. Okay, and I'm buying dollar CAD, I'm buying dollar Swiss. So that is a very dicey trade if you ask me. But when you take a look at the DXY is very bullish right now. So that is just what I'm literally taking advantage of, because earlier on, when the old market is actually, when pound dollar, euro dollar were actually going up, it wasn't because pound or euro was very strong at that time. All right, it was because dollar was awfully weak. Now that dollar is gaining some momentum, I guess it's literally beating all these currencies at their game. That is just the way I approach it. All right, but you might have another idea, but that's the way I see it. So that said, let's take a look at the economic calendar we have for this week real briefly. On Monday, we really don't have that much of data. We have bank of holiday in Japan, and in China, we have 1 year loan prime rate and 2 year loan prime rate. It's actually forecasted to come just as the same. So for people borrowing money in China right now, they're literally there's no increase or decrease in their 1 year and 5 year loan rate. So that's more like that. On Tuesday, we have a monetary policy meeting in Australia. Reserve Bank of Australia will definitely be having a policy. It's more like a meeting minutes, okay? FOMC also does that, where they just read when they just read out an update on their previous meetings. It's more like that. It's a minute, if you know what I'm trying to say. So in the United Kingdom, we have Governor Bailey also have a speech. In the United States, Fed Chairman Powell also have a speech. And that's more like all the data that we have on Tuesday, just a bunch of speeches and meetings being read. That's more like it. On Wednesday, no data, everything is literally blank. Although on Thursday, we have the usuals. Okay, we have very early on Thursday, 4:30 a.m. Nigerian time, we have Reserve Bank of Australia Governor speech. And then after that, we have series of PMIs, okay? Series of PMIs, and PMIs, all right? And by 1:15 p.m. on Thursday, there's main refinancing rate and monetary policy statements from ECB, which they actually forecasted to come just at the same. So ECB is literally not cutting rates anymore. I don't see them cutting rates in the next couple of months. Actually, I don't see them doing that. I mean, it's 2.15%. That should be enough. And they have inflation at a very good level. They have the GDP is actually quite decent, so they don't really need to cut rates or even hike it for now. The European economy seems to be doing pretty decently. So that is just, and that's a plus for them, or that's a kudos from me to them. Anyways, so by 1:30 p.m. in Canada, we have core retail sales and retail sales coming out. It's forecasted to come lower. I mean, the core retail sales is forecasted to come a bit higher than previous. Okay, it is expected to be added by 0.2%. However, whatever comes out of this will determine how we see CAD moving forward, because as you can see earlier, CAD is awfully weak, okay, at 29%. So if this now ends up coming very, very weak again, maybe we get like maybe negative 0.5%, then that would be not good. Retail sales is also expected to drop crazily from 0.3% to 0.9%. Anything below 0.9% will mean a more drop in the price of CAD, which USD CAD will probably go up. You know what I'm saying? So that's good. On Thursday, the usual unemployment claim in the United States is coming and is expected to come slightly higher than previous, which is not good for the dollar. But we see how that goes. Okay, I'm not sure if this is going to be the actuality. Maybe we're going to get something very close to 229. Maybe we're going to get like maybe 228 or thereabouts. I'm not sure. But I don't think we're going to get a very, very big number like that. And lastly, by 1:45, ECB press conference as usual after interest rates and monetary policy statement. What follows is the press conference. And 2:45, we have the flash manufacturing PMI and service PMI in the United States. And on Friday, the market is going down with GBP retail sales month on month. And the core durable goods order month on month, the durable goods order month on month in the United States. And that is everything that we have next week. What we have majorly for next week is the ECB main refinancing rates, the retail sales in Canada, the speeches on Tuesdays, and then definitely on Thursday, the bunch of retails flash manufacturing, the manufacturing PMIs and service PMIs, but let's just say the PMIs. And then on Friday, we literally have only retail sales in the United Kingdom coming on Friday. That actually makes a very good sense. So pay close attention to Tuesdays and Thursdays when we have serious data, and that's all. On Wednesday, it's actually free. Wednesday is very, very open for everybody. So that's more like where we are right now on the economic calendar and where we are right now moving forward to this week. So we've talked about the top 3 setup, we've talked about the economic surprise meter, we've talked about the US economic heat map. I don't know if we should talk about the institution position. So the COT data, let's see if we can talk about 1 or 2 on that. Let's touch 1 or 2 on that before we actually move to the technicals, where we're going to be talking about my open positions. So if you take a look at the general view, the net positioning right here, we see that we still have the institutions roughly buying a bunch of US oil, they're buying euro, they're buying copper, Japanese yen, silver, gold, South African rands. Okay, these are the assets that are still very much high on the table of the institutions. When we have the likes of Aussie, CAD, Swiss, Russell, and S&P 500 literally, yeah, and US 10 years bonds, okay, or US yield, okay, we have them at they are literally below 40% right there. We have Aussie below 20, we have CAD roughly above 20%, we have Swiss roughly above 20% as well. Russell is probably above 25-30%. US 10 years yield around 30% also. S&P 500 is roughly below 40%. Okay, roughly below 40%, which is still very weak. Okay, But let's check the latest filings on Friday. Taking a look at Europe, Eurozone, you see that we have short contract was closed where new long contract was added for the euro literally. Gold, we have as far as gold is concerned, we have some more long contract was added, whereas some short contract was closed. That is quite decent. For CAD, we have both long and short contracts was added last week, but we have more short contract added than we do with long contract. US dollar, roughly, we have a bunch of the short contracts was closed. However, just a few, like 54 long contracts was added. Bitcoin, majorly, averagely the same was added, both long and short. And that left to be the long contract around 47.57% and short net positioning at 52.40%. On the pound, we have both long and short contract was closed last week, Friday. 7,000 worth of long contract was closed, while 30,000 worth of short contract was closed. Aussie, let's take a look at that. Both long and short was also closed for the Aussie. The same thing goes to the Kiwi right there. Both long and short contract was reduced. Silver, both long and short contracts was added. SPX, which is more like S&P 500, you can see a few long contracts was added, but a ton of short contract was added as well. You can see 29,000 new short contract was open. That is a lot. The same thing goes to Dow Jones. There's 399 new long contracts was added, whereas we have 1,170 new short contracts was also added. That's a lot. Japanese yen, which is the last we're going to talk about today. The Japanese yen, we have some long contract was closed, whereas a ton of short contract was added. 11,000 plus of short contracts was added on Friday for the Japanese yen. Now, US oil, which is at the very bottom right here, we have some long contract that was closed right here, and we have some short contract that was added also. Like it's more like in the same proportion. 24,000 long contract was closed, whereas 22,000 plus of short contract was added for the US oil. That is a ton of things that we should pay close attention to. So we're going to see how this actually is, how all of this is factored into the market this week, and how we can take advantage of them moving forward. Okay, so that's more like everything we have right here. But none of this actually doesn't seem bad for the top setup we have right here, and based on the trade recommendation I'll be sharing with us as time goes on. Earlier on, we talked about the DXY. So let me paraphrase a little bit before we go and start talking about my top setup. My open positions. So as far as DXY is concerned, we saw a very decent break above this region right here, this particular demand zone. All right, or let's say support region. Okay, we have the support right here, which was broken last week around that 98 region, the 98 region right there. So it was broken last week, Monday, and we got it retested. This is everything that happened last week. Break and retest. That's everything that happened last week. Now, where do we go from here? Two things will likely happen for DXY, but like I explained to us earlier on DXY, you can see right here on US Economic Heat Map, we got a very good retail sales last week. We got a very decent initial jobless claim as well. Okay, and then the CPI and PPI was something else. Okay, you can see PPI came out quite low compared to what we actually forecasted, what was forecasted. So, however, the CPI year on year was pretty decent because there were no increments or decrements from what was forecasted. So we got 2.7%, exactly what was forecasted for last week, which is very good. So overall, we see that for the dollar impact itself, we have quite a decent bullish readings, okay, and very few bearish readings. However, we also have some neutral readings as well. And when it comes to the stock, almost the same thing as well. Very much bullish reading and just a few bearish reading. And then we got a couple of neutral readings as well. So that left the dollar index itself, or US dollar impact, at 53.85% strength. And the same thing goes to the stock market impact as well. So that is very good based on the data that was released last week. And now where do we go from here? Considering the drama that happened last week when there was a report that Donald Trump is planning to was drafting a letter on how he's going to fire Powell. He can't fire Powell, let's be clear on that, because he didn't employ him, he wasn't employed, it was a nomination and he was voted in by the majority of the Feds, the FOMC committee. So they are the one that voted him. But the best Trump could do is draft a letter, send it to them, let them deliberate over it if they're going to go ahead with what the president is assuming, or they're just going to cancel it, or probably they're going to look away. But the thing is, the president has a ton of impact, a ton of effect on how the decision is being made by the Fed, because everybody wants to be the friends of the president. That is why we saw that impact. However, I think an hour later, Donald Trump took it on himself to post it on his social media pages. Okay, nothing of such was happened. The report was actually wrongly reported, or let me put it that way. So, and we got this whip shot effect when the market jumped down, went back up, then do something like that. That's why we got this move last week. So aside that, nothing super crazy happened last week. So we could likely see the same thing going forward into this week. And don't forget what I said earlier last week. Okay, I said if the market stay in this box, I am neutral to bullish. Okay, I also said this earlier today. If the market stay inside this box, if it ranges between 9800 to 100, okay, I mean 98 to 100 region, I would stay neutral to bullish. All right. The only reason why I will be full bullish on DXY is if it breaks above this region, the 100 region, and it tilts toward the upside, then I will be fully bullish on DXY. Anything outside of that, I will remain quite cautious. And based on the data, based on the top setup I shared earlier, I'm very much interested in Pound USD, which is one of my trade recommendations. So let's quickly talk about my top trade setup, which I'm going to be starting with CAD JPY before we now talk about my trade recommendation. And as you can see, the report on Powell and Trump drama that happened last week actually got this thing very, very crazy. I woke up and I saw that the market was around this region. I was pretty concerned because my stop loss was slightly around here. So when I saw that, I wasn't really very happy because I knew that the whales or the top guys can take advantage of that and probably ride this thing downward. However, it's more like a whipsaw effect. Like I said earlier, the market came down, then went back up almost instantaneously. So that is where I am right now on CAD JPY. It's still very bullish. I'm still holding on to this trade. It looks very decent. Same thing goes to NZD JPY, although this one kind of tapped me out last week. Okay, I was trailing very tightly around there on 4-hour time frame. The whipsaw effect that happened tapped me out on Wednesday, Thursday, Friday, yes. So I was able to join again on Thursday around this region, and right now I'm still holding on to this one. But we see how it goes, okay, because I really didn't like the effect that report had on the market, but there's nothing I could do. I can't stop it. I don't have that kind of power. So that is where I'm at right now. As far as Aussie Kiwi is concerned, I'm still holding my short position on Aussie Kiwi. It looks very decent. It looks pretty cool. So I'm going to have to see how this goes. But the pressure is not over because we have a little bit of a resistance right here. All right, that could pose as a challenge where the market can gather some momentum and move to the upside, potentially closing me out in the loss. But if that is not the case and the market break below here, probably uses another resistance, then we'll likely see the market coming down here, giving me a whooping around 4.3%. That would be a very good one for me and my entire household. So that's that. WTI, I'm still holding my buy trade on WTI. It's been a show also since Trump effect again, the report that is going to fire Powell, which it can again, but the report came out nonetheless, which is not very cool from them reporting something like that when it's not finalized. All right, but they reported what they heard, right? That's what we were told. So that kind of took a toll on this particular trade, the WTI trade. Now running it back to break even, all right, or maybe it's small loss, I can't really tell. But this is where we are right now on WTI. So that's that. NZD dollar is a very pressure trade considering the level of strength I've come to for the dollar this week. So this trade is in a little bit of a drawdown. Okay, not even a little bit. It's in a massive drawdown somewhere around on Thursday before Friday came and the market kind of like torpedoed back to the upside. The pressure is still there. I can as well lose this trade, honestly. Okay, it's very possible. But whatever happens, I'll keep holding on to this trade and I will give you updates as time goes on. So now jumping into my trade recommendation. Let's start with EURUSD. When you take a look at the top setup right here on Edgefinder, we don't really have anything on EURUSD per se. All right. But if you're looking at the Forex scanner, where euro dollar will be the first pair that we're going to be seeing, let's see the score that euro dollar have right here. You can see first off, it is a neutral reading, okay, and it is reading a +2. That is not about enough for me to go ahead and buy EURUSD for anything, okay. So that is just number one. Wow, taking a look at the economy, the technical part of this particular pair, this particular trend line, the daily trend line has been broken. You can see this trend line was a very strong one. It was retested multiple times, 1, 2, 3, 4, and I think this is where it was destroyed utterly. So now, where do we go from here? We also notice that this particular resistance right here, or let's say, yeah, more like resistance, has been broken violently to the downside. However, from here to here, when you look at Fibonacci, the price is still currently sitting on 61.8 golden ratio zone. Okay, the Fib golden ratio, which is very good. Okay, it's very, very good. However, when you take a look at the technicals on the smaller band, I think there is higher potential of the market, of euro dollar actually jumping down. Last week, I took a short trade on pound USD, euro USD, particularly on a short-term frame trade. And I took a short trade right here, and it's currently in profit right now, honestly. So, and I left the trade to run for maybe till Monday, then I'll close it, maybe during the London Open on Monday. However, this is not looking very good for the buyers right now. The only thing that will keep me bullish on euro dollar for now is if I'm able to see a break above this particular trend line. Okay, I'm a big fan of trend line, even though it is not my primary tool, but it's a very important tool in my entire system. Okay, so if the price, let me reduce this one a little bit so we can have a clearer view of what I'm trying to explain to us. So let's keep that one right there. Good. So potentially, if we get a break above, yeah, this is supply, should be this supply. Yeah, that's the supply zone right there. Good. So potentially, if we get a break above this trend line, number one, above this particular high also, number two, we get a pullback, retesting this particular region, then I would consider buying Euro USD, and I will just count this as a what? As a false breakout. Okay, I'm going to count this as a false breakout. Anything outside of that, and what do I mean by that? I mean anything outside of what I just explained. If the market continues to go down from here, I will still be holding my short position, and I will keep selling even on my long band, on my long trade setup, my swing trade plan. All right. However, if you break above there, pull back, then we're back to buying Euro USD. So if you're not impulsive, if you're not in hurry, wait for those two things. If it stays below here, just look to short. All right. Forget the story. The trend line has been broken. All right. The structure has already been violated. This particular one, this key zone right here, is being violated. All right. But it is not fully violated yet. So if the market continues to go down, tilts toward the downside, and we saw that DXY continues to go up, then we likely just join the moving trend all the way to the downside. Why? The last drop is because you can see this momentum right here. This is a clear bearish momentum, even on the 4-hour time frame. So this is a clear bearishness. Okay, it is bearish. All right, I don't know how else to say it. We have lower low, lower low, lower low, lower low. All we need is another lower low, lower low, lower low. Okay, that is how it started earlier this year also, when it was going to the upside. So don't marry a bias, don't marry a chart, follow the momentum and just trade it comfortably. That is where I stand on Euro USD. The second trade recommendation will be Pound USD, excuse me. As far as Pound USD is concerned, this one has been going down for a very long time as well. However, if you take a look at the chart also, it is comfortably breaking this trend line right here also. And this trend line is not a trend line of yesterday. It's a trend line that started some months back. This is 2025, January 2nd. You can see it was tested once, twice, the third time, and this is the fourth time it's been tested. So now, the retesting of this fourth retest is still very young, okay? And the breakout also is also still pretty young. That is why I'm trading this on the 30-minute time frame, which is a short-term trade yet for now. Until we get a decent break of this dramatic low right here. Okay, if we get a break below here, a nice and decent pullback, then I will officially short Pound USD. And when you take a look at the edge finder right here, okay, when you take a look at the edge finder, I'm coming Gbpusd USD. All right, good. So this is edge finder right here. We take a look at it. I think this one is still coming up. Forex scanner Pound USD. Yeah, it's loading up. Or let's take a look at Pound dollar right here on edge finder. You can see right here we have Pound US dollar with a reading of very bearish and with a bias of very bearish and a reading of -9. That is a very big number right there. -9 is strong. Now this is COT data was -2. We have seasonality to be -1. We have the trend to be -2. You can see the deterioration in the trend of Pound USD. That is nothing to beat. It's also very similar to the one we've seen on Euro USD. Let's see if this has actually come up. Yes, you can see right here, -9 score. Okay, and everything just looks very red right here. Even seasonality is bearish. The retails, the retail and the retail long and short also, most retailers are also shorting, but the market sentiment when it comes to the COT is more like favoring the long contracts per se. But everything just seems to be very bearish, honestly, because for the US dollar we have more short contract than long contract. For pound we have more long contract than short contract. That is also very bearish. For the retail sales, I mean the retail sentiment, meaning what other traders like you and I are doing, it's also very bearish. And when you factor seasonality into it also, the 10-year seasonality is also very bearish. So I mean everything just feels very bearish right now on pound dollar. But don't take my word for it. Take a look at the chart as well. Plan yourself very well, all right? You don't need to sell immediately. At the same time, you don't need to awfully or impatiently buy. Let's plan for buy opportunity too. I like both sides. Okay, the market is still very bullish. Okay, I'm not going to go against that. Still very bullish, although there is an overly expected or an overdue pullback from this particular pair. But let's take a look at. Then let's not take a look at that. Let's not get super into what is overdue or not. Let's take a look at what we have right here. The trend line has been broken. The market has broken below this particular structure right here, this key zone. You can see resistance, support. Now we have another support. We actually even need to open a bigger region right here to catch this support to make sure it makes sense. Okay, so that's it. If it continues to go down, okay, you might want to join the moving trend. However, if because we have a bearish trend line, right? I mean, if you are looking at this on the 1 hour time frame, the bearishness is very, very obvious on pound USD. So this is the one we have right here. We have a bearish trend line at the top there. If we get a break above it, a pullback to retest this region, why not? Go ahead and buy. All right? Go ahead and do it. Go ahead and buy. But if it stays below here, my brothers and sisters, my friends, my colleague, you might want to do what? You might want to look into shorting pound USD. Simple. Fundamentally, it is bearish. Technically, it looks like we might get a bearish reading. We might get a bearish trade. So plan yourself accordingly. Don't take my word for it. Prepare yourself, watch out for it, and go for it. The next trade recommendation will be BTC, which is Bitcoin. Bitcoin made a fresh new all-time high at 123K, 123K, roughly 123K, right, approximately. But we have some 217 behind it, which we don't really care about anyways. But we know 123K is fine and fancy. So that's where we got the new all-time high at. And since then, we've gotten a very, very sharp drop to the downside since then, which actually take the price back to 117K. That's decent. Now, I'm still very bullish on Bitcoin. I'm going to tell you that. However, you know what I'm going to say next. My next thing is to see if we can get a nice and decent pullback, my brothers. We've got to get a pullback. Failure to get a pullback, I will likely just sit and watch out on this. Okay, although we've gotten a pullback, roughly 38.2% pullback has happened. But let's see if we can get 50%. I mean, we can come back to this region. Why not take a buy from there all the way to the upside? We've had analysts, we've seen analysts, we've watched people talk about a possibility of 140K, possibility of 135K, and I've even read article of 160K before the end of this year on Bitcoin. So there's no argument on every sphere of the market, both Elliott Wave analysts, price action analysts like myself, SMC and ICT traders, if they actually forecast something like this, okay, everybody is actually bullish. Even the sentimental traders, everyone is pretty bullish on Bitcoin. But the plan is, how do you join? If you're not in this trade yet, how do you plan to join? This is the first plan. Wait for 50% retest and take a buy, or wait for the retest of this particular region, the 112K. I know that might sound very scary, but yeah, it could happen. So if you come back to this region, yeah, you can look for buy opportunity on Bitcoin. So around that 115K or 112K, if you get any of that pullbacks, you can look to buy BTC. However, if you can't wait for that, then you can also just go ahead and take a buy right now and see how it plays out. But for me, I wait for 115 and 112 before I join the buy on Bitcoin. Mind you, I'm already buying. Okay, I'm already buying. But if I'm gonna have to the trade, that's how I'm gonna go. Okay, so let me give you one more, which is good. And don't forget, as far as Bitcoin is concerned, on Edgefinder is also reading bullish with a score of 6. So let's not get us twisted. So on Edgefinder is also very bullish. So that is that. I just want to have that to it. So lastly, on gold has been ranging right here, and it's been giving me a little bit of concern because last week we discussed what drives the gold market. Okay, what drives the gold market? We know it. Chaos, uncertainties, dollar strength or dollar weakness, inflation, interest rate in the United States, the Fed's monetary policies, All of these things are factor to what drives the dollars and the gold market. But currently, the United States economy seems to be doing pretty stable. It seems to be doing very well. Okay, seems pretty stable. That's what I was trying to say. So, all right, as far as the geopolitics and uncertainty goes, Donald Trump is still very busy with tariffs with the EU. I think Canada and Mexico are still on the table, and some other countries around the globe are also part of the one that Donald Trump had issue with when it comes to tariffs, especially Brazil is very vocal about it. So yeah, there's still a little bit of uncertainties when it comes to tariffs and all. And then when it comes to geopolitics, we still have Syria, US, Israel. We still have a little bit of drama in Lebanon as well. So we don't really have that much of peace around the globe also when it comes to geopolitics. So I think there's still some bullish sentiments to gold on the long term. Okay, so let's pay close attention to that, and that is why I won't be selling gold for now. At the same time, do I want to buy gold immediately? No, not yet. Okay, it's in a range. The best place to buy is right here, which I discussed. The second best place is right here, which I also discussed. The third place is right above here. Okay, so number one, if you miss this first number one, this first place is fine. If you miss the second place, it's fine. Wait for the break above here, pull back, and take this third one. Okay, it's also going to happen. All right, and potentially once this particular region is broken, 3,500 might not be able to catch it. It might end up breaking above it, maybe to 4K this time around. But it's still very much objective. We don't know how it's going to play out. But a break above this 3,380 region. Okay, I think there's a lot that can happen moving forward from there. So plan yourself accordingly. If the market ends up coming back to retest this 3,290 region, or let's just say 3,300 region, okay, you can also take a look at those regions and take a buy. All right, but just make sure you stay very cautious. You stay very open to the potentiality of gold also coming back to this region, so you can take a buy. Well, I think there is a high possibility of 3,300 retest, then we take a buy from there, or just anticipate for what 3,380 and look for buy opportunity. Then you can target the all-time high moving forward. So that is where I'm at on gold right now. And lastly, on Edgefinder, gold is also very bullish. It's bullish with a score of 6. So that is another confluence that you can factor into the reason why you want to buy gold. Okay, so that is that from me today. I will see you in the next one. I will see you next week. Please, guys, don't forget to subscribe to my YouTube channel. Don't forget to follow me on my socials. If you want to have a conversation with me, my DM is always open. My email is also very open for conversation, for deals. I will see you in the next one. Don't get margin called. Have a nice day.